Welcome to the Genius Factory. Enjoy the video.
In this video, I will explain how to file the income tax return for a partnership firm. First, understand that partnership firms use a specific ITR form. You'll need to gather all your financial documents, including profit and loss statements and balance sheets, before you begin. It's crucial to report all income and expenses accurately. Finally, make sure to meet the filing deadline to avoid any penalties. This guide will help simplify the process for you. To start, you'll need several key documents. Collect your firm's financial statements, such as the profit and loss account and balance sheet. If your firm's turnover exceeds 1 crore rupees, ensure your audit reports are ready. Also, have all partner details and their capital accounts updated and accurate. Partnership firms specifically use Form ITR 5 for their income tax returns. Having these prepared will make the filing process much smoother. The online filing process is straightforward. Begin by registering or logging in to the official income tax e-filing portal. Next, download the ITR 5 utility, which allows you to prepare your return offline on your computer. Once completed and validated, upload the generated XML file back to the portal. Finally, verify your return using either an Aadhaar OTP or an electronic verification code, known as EVC, to complete the submission. Remember a few important considerations and deadlines. The general due date for filing partnership firm ITRs is typically July 31st. However, for firms that require an audit, the due date extends to October 31st. It is also essential to maintain proper books of accounts and other relevant records for at least 8 years. For any complex situations or specific queries, always consider consulting a qualified tax professional.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.